Hello everybody and welcome to this Protection Insight podcast. Today we're going to look at writing a life insurance policy with AIG into an AIG discretionary trust. And we're going to use the paper PDF trust form to demonstrate this. Joining me today is Trevor Head, who is a senior protection specialist over at AIG. So Trevor, welcome to the podcast. What I want to do is focus on all the bits that I need to do to get the job done. So I've got the trust form open on my screen. I can see on the first page it's a discretionary trust for single life. This policy is a single life policy. My clients, Trevor, are not married, so I need to make sure that we write this policy into trust so that the partner can actually benefit from the proceeds should the worst happen and the client actually die. So looking at the trust form, Trevor, if I move my way down to page 2, there is actually a checklist there, Trevor. Just talk this through. This isn't what I would normally expect to see on many other trust forms.
Okay, thanks, Vincent. I think the checklist is really your starting point, and refer back to it as you complete the document, because you can see there in sort of the dark column on the left-hand side that some things that need to be completed on this form are mandatory. So, for example, the top one there, policy number and details of the policy holder and additional trustees. Some are optional, and you've got a little tick box on the right-hand side. So as you go through and you're completing the various sections, just tick the checklist just to make sure that you do everything that you need to do.
Yeah, it's really handy actually. It means you can't miss anything. I think the other thing to point out there as well is what to do with the trust form when you're finished with it. It does say the original executed trust deed or a certified copy needs to go to one of your offices down in Harlow. So that's good to point that out on page 2. So if we move down to page number 3, Trevor, there's actually a full list of definitions. What's this all about?
Okay, now obviously we're not going to go and read through all these definitions, and you wouldn't have to do that to complete the form. Really, this is a reference section, so if you are completing the document, if a term comes up that you're not familiar with or you don't understand, just use the definitions section to fully understand what's meant by that particular term. But whilst we're looking at it, I think it's quite important just to draw your attention to the section on potential beneficiary. It's quite a sort of a wide section there, because the point of a discretionary trust is that it really gives the trustees wide discretion as to who can benefit from the trust. It's a common misconception that it's really the named people, the named beneficiaries on the trust that will benefit, but that doesn't have to be the case. And so you can see there's a list of 9 different classifications of people who could potentially benefit. So it's worth having a look down there, and basically what you will see is it's probably very difficult to find somebody that the settlor knows who couldn't benefit, because they probably would meet at least one or more of those different classifications.
Really good. Okay, so if we scroll down the form a little bit further, now there's quite a bit of legalese on here. We're going to go past a bit of that, and we're going to find ourselves on page number 6, which is really the first page where we need to start completing the trust form. So just talk me through what I'm seeing here, Trevor.
Okay, just on that legalese bit, obviously we've sort of skimmed through it just for the benefit, of yourself and anybody else that happens to be listening to the podcast. That's basically the rules. So that's the rules that the trustees have to follow, just the restrictions that are placed on them as to what they can and can't do within the trust. But you're right, there's certainly no need to be reading that every time that you complete a trust. So yeah, page 6, so we're looking at section C, the declaration of trust. The first thing, and I think it is mentioned on that checklist, you've got a date there. It says the declaration of trust is made on, and then you've got 3 spaces, one for the date, as in like 17 or 27, a section for the month and a section for the year. But see the bit in capitals underneath. Do not date this until all parties, the settlor, the trustees, the witnesses, have actually signed the document, and also don't date it before the date that the policy has been issued. So the easiest way, I guess if we're talking existing policies, that wouldn't be an issue. If it's a new policy that we're using a paper trust form, make sure that the policy is enforced before you date it. Hopefully I've made that reasonably clear. And then as you come down, whilst we're on that particular page, your next point down, you've got cover reference, and it's been sort of started with a P. The reason the P is there is that all of our policy numbers start with a P. So put in the policy number there, just fill in all the numbers that come after the P. That's actually the application number as well. So you don't actually need to wait for it to be in force. If it's a new policy, you can just write the application in. Cover type. That's just very simple. If it's life cover only, I'd put life cover only. If it's life or early critical illness, put that, and so on and so forth. And then you're coming down to basically details of the actual party. So this is the meat of the trust form in terms of the detail that you do actually need to complete. So the trust is between the settlor of the trust, which is the policy holder, typically our life assured. So we need to put in the full name of our single life, in this case policyholder, and their address. And then as you come down, you'd need to be putting in details of additional trustees. Now, I think you've already said that the unmarried partner of our settlor is going to be the first additional trustee. So you'd be putting her name in there, full name of additional trustee plus their address. And then you do need at least 2 trustees, but I would suggest, and I think in this scenario you've got 3, which is good. You do need at least one other, I would suggest. And the scenario that I always come back to there is, particularly if we're talking about a married couple or partners, they spend a lot of time together. They could be in a car accident together. You want to make sure that there are more than just those 2 trustees, so that if anything happens to them together, there are additional trustees who can still act on their behalf. So as you come down, you can have as many additional trustees as you like, and each time it's just the full name of the additional trustee and their address.
Okay, Trevor, that all makes sense. So if we move on to page 7, now in my case study, I've actually got 2 clients. Obviously, there's only one life assured, and that life assured wants his unmarried partner to actually benefit from the proceeds of his life policy. So we've got a section here that says potential beneficiaries, but it's optional.
Okay. Yeah, actually, going back to what we said with the definitions of potential beneficiaries earlier, this is probably one of those few scenarios where you would want to place a potential beneficiary name into that optional section, because as an unmarried partner, she's probably not going to be covered in one of those 9 classifications. So to be on the safe side, we just put the name of the unmarried partner into that section, and address if applicable. That's obviously applicable because we are putting her name in there. So that's where we would pop her in and make sure she's covered as being able to potentially benefit from the trust.
Okay, and if we look at the next section within page number 7, this is talking about gifted and retained benefits. It looks quite clear, but just talk me through this, Trevor. There's 3 different boxes to tick.
Okay, so this is a proactive section of the trust, and this is what's commonly referred to as to what makes the discretionary trust a split trust. So I think, commonly, we're used to the idea that we've got life cover, and the life cover is automatically gifted to the trust because you've died, unfortunately, and we want that sum assured to go to the beneficiaries, so the life cover is automatically gifted to the trust. But quite often now, even on life cover only cases, we're talking about additional benefits over and above the life cover, such as terminal illness cover. We could also be talking about critical illness cover as well. I wouldn't worry too much about the care cover benefit. That is a very specific product. Our care cover with whole of life, you're probably not going to trip across that too often, but that's why the care cover benefit is also mentioned there. So these are basically benefits that are paid out whilst the policyholder is still alive, and because they're paid out whilst they're still alive, it's really up to the policyholder whether they want to benefit from those benefits while they're still alive, or whether they think it's more appropriate to gift them from the trust. Now, to be honest, with the critical illness cover, I would say 99 times out of 100, you would retain the critical illness, so that if you had a heart attack, a stroke or cancer or something like that, you've got the money available to help you get better. The terminal illness benefit, that's probably a more common one where it's a bit more 50-50 as to whether you should gift it to the trust or retain the benefits. And that's very much an individual decision for the policyholder. So if you imagine that our policyholder is terminally ill, they might be thinking, you know what, I've only got a few months to live. I'd rather have that money and go on a round the world cruise or whatever else they want. They want to live their life to the full, and that money would be really, really useful. Somebody else's view might be, oh, I'm terminally ill, I'm not going to live very long. This is just going to create issues for my dependents. If I sort of have that money, better that I just gift it to the trust as though I've already died, So, but it's a very personal decision. So basically those benefits, terminal illness, critical illness and care cover, if we're talking about that very specialised policy, they will be retained by the policyholder unless the policyholder, who is also the settlor of the trust, ticks one or more of those boxes. So if we just focus on terminal illness, if they want to gift the terminal illness benefit to the trust, they tick that box. If they want to retain it, they don't have to do anything at all.
Okay. I think we'll tick that one, Trevor, because that is a life insurance benefit. So if the client is terminally ill, it makes sense to get rid of it outside of their estate. So if we turn down to page 8, this is where we've got a section called default beneficiaries, and this section is actually mandatory. So what do I need to fill in here, Trevor?
Okay, just before we come back on, or come on to the default beneficiaries, let's just go back to the gifted and retained quickly. I just want to make the point that that's very much a decision that can only be made at outset. So a little bit of care needs to be taken, because once you've made that decision and completed the form, it can't be changed in the future. So just bear that in mind as well. But back to the question you've just asked me, we're at the sort of the default beneficiaries. As you can see, that's mandatory. So here we have to have at least one named default beneficiary, and that's just a technicality as much as anything. Trust forms only have a lifespan, they're only valid for 125 years. That's part of trust law. So you have to have a default beneficiary, so that in the very, very unlikely scenario that the trust expires after its 125 years and the assets of the trust haven't been dispersed to the beneficiaries, it would automatically go to the default beneficiary. But in the scenario we're talking about here, the money is going to the unmarried partner. So again, we put the unmarried partner in here as the default beneficiary.
Okay, so let's move down the form again, and slightly unusual section, because I haven't seen this on other trust forms. We've got excluded persons at the bottom of page 8. I think it does what it says on the tin, but just explain, Trevor.
Absolutely, yes, does what it says on the tin. So this is almost like the reverse of what we're trying to achieve with the trust form. We're keeping the trust form very, very open. We've got a wide range of potential beneficiary classifications, lots of people who could potentially benefit from the trust. But if there is a person or persons that the settlor of the trust specifically do not want to benefit, there might be a whole host of personal reasons, maybe a lack of financial responsibility, perhaps they're in prison or something like that. There might be a very good reason why there's one or more persons that they don't want to benefit. That's where they enter their details.
Okay, good stuff. And if we move our way down to the execution of a trust, now this is actually getting towards the back end of this, and we've got some sections for settlers, additional trustees. Is this where we need to sign, Trevor?
Yeah, this is all your signatures, and there can be quite a few. So it's worth taking a bit of care over this section to make sure all of the relevant parties sign in all of the relevant places. So I'm sort of starting there with the settlor. So the settlor we know is our policyholder. So the settlor signs, and the name of the policyholder, the settlor, goes in alongside that signature. Now each of these signatures needs to be witnessed. So it needs to be signed by somebody who's witnessed that settlor signature, who's also not related to the settlor and is independent of this process effectively. So it doesn't need to be any professional person, any specific qualifications. It could be a trusted friend or something like that. And they sign to say that they've witnessed the settlor's signature, and obviously their address details goes in. And once you've got your head round that, really it sort of follows all the way down. So for each of the additional trustees, they'll need to sign, and whoever witnesses that signature needs to sign as the independent witness for them. So you could have a lot of different witness signatures. It just needs to be the person that witnesses that specific signature. But as you can see, as you go down, additional trustee, additional trustee, additional trustee, and in each case, it's the signature of the additional trustee, their name, and then name, signature, and address of the independent witness.
Okay, and then we're nearly at the very end of this now. We've got the execution by trustee company, if applicable.
Very unlikely this is going to be applicable. You can employ a trustee company rather than individuals to act as your trustee. That's commonly the case, or more commonly the case, where you're talking about big, complicated family trusts, one of these big wealth trusts where there's a lot of administration involved, and you might sort of outsource that to a trustee company in the same way as if you were appointed as an executor of a complicated will, you might outsource that work to a solicitor because you don't want to undertake it yourself. So I would say that for personal and mortgage policies, very rarely you're going to have to worry about that section.
Yeah, because that's a professional trustee effectively. Now that everything is completed, you've picked up all the signatures and all the witness signatures, you can return to page 6 and enter today's date. Well, that's basically the whole form done, really. So I guess now that we've finished the form, we just need to obviously go back to the top of the form and see that address in which to send it. We need to send the original, or we need to send a certified copy across to AIG. And then when we've done that, that policy is written into trust. So that's great, Trevor. Thank you very much for guiding us through those different pages there. It's not as difficult as it seems when you first look at the form. And I hope advisors watching this podcast have actually got this as a good bit of resource for when you start writing AIG policies into trust in future. Obviously, there is a great online system for new business. So that's it from this podcast today. Hope you found it useful. Until next time, it's bye for now.